Hi traders, I have a question for you. As a smart money traders, are you to totally ignore the trading methodology, the retail trading methodology that we have been taught back then? Or let me know your comment in the comment section, okay? But I'm here to tell you that you do not need to throw away all those retail candlesticks chart pattern that you've learned back then, okay? I'm going to show you the relationship between the change of character, the fancy change of character that is out there. Most people think this is the holy grail, okay? But if you understand this concept, the change of character, you will put your trading career at a better zone. You'll be trading in a better zone. You'll be having more wins and the rest. So first of all, what is this trading methodology called change of character? Okay, a change of character to me is simply a change of order flow. Okay, if the market is going bullish, okay, we have a bullish push in the market, bullish, then all of a sudden we have the lows being okay, we have a bullish market here. Now this bullish order flow is simply bullish because it attacks the tops. Okay, market keep taking the highs, and that's what makes it bullish, and then the lows are being protected. Okay, from year to year you can see that the lows was not challenged up until this point. Now when you get to this point here, this is where you now consider that there is a shift in what order flow, a change in order flow, which is the change of character, and this is done in the lower time frame. If I'm looking at the higher time frame and I want to know if the market will soon move to the lower side, okay, to the downside, I have to go to a lower time frame to observe for what a change of character. So that is the change of character, meaning price takes the liquidity above and also take the liquidity below. You don't necessarily need a break of structure. Sorry for that, something just messed up the chart. Okay, you don't necessarily need a close, okay, below this low. The moment price takes that low, that signifies what? A change of character. Okay, so this is an example of a bearish change of character, and this is an example of a bullish change of character. So henceforth I might be using the word choch, okay, but there's nothing fancy about it. Okay, there's nothing fancy about it. Okay, so now in a bullish change of character, the order flow shifted from bearish to what? To bullish, meaning before now the lows were challenged and the highs was what? Was protected. The moment you see the recent high get challenged, either with a close or a wick, then we have what? A change of character. And the way it's being traded, most you identify a point of interest in here, that when price comes in, okay, you buy. In this case, when price comes in, you sell. Now what if I tell you that you can also observe a change of character in candlesticks pattern? Okay, in candlestick pattern. Okay, and I'm going to show you that here, and I'll walk you through examples. Okay, that is why you don't need to cram or memorize any pattern. Stop cramming patterns. All you need to do is understand market behavior. This move, what does it mean? Okay, most people just cram this, or this is a quasi-bodo, and they start trading. But as a professional trader, you must understand what the market is trying to do. When the moment price challenges this, you should know that the price should be heading lower, meaning the order flow, that is the key word. The order flow is shifting. Okay, it's not about choch, it's not about quasi-bodo, it's not about any QM. It's simply because the order flow wants to shift. Price is seeking the lows of the market, which are what? Liquidity. Okay, so now the first pattern I would like to share with you here is the evening star and the morning star, evening star, morning star. Now, what does this mean? When you see these three patterns, especially in the swing, price went up, this was the last high. Okay, in a lower time frame, if this was occurring in the H4, pay attention please, because this might be a game changer. If this occurs in the 4 hours and you see this red candle play out, that means in the lower time frame there's been a change of what character. Okay, this is an high here, higher high. Sorry, this is a low, low, higher high, higher low, higher high. All of a sudden the higher low was challenged. The moment you see that happening, then we have what? A change of what? Character. The moment you see this happening, they being challenged with this, we have a change of character. Okay, and what happened when price traced back into this area? When price traced back in here, you look for your selling opportunity. Now, the difference between this and the retail is that the retail trader want to see a bearish candle again. They want to see another bearish candle. Those that are trading this evening star, they want to see another bearish candle here. Okay, when they see bearish candle, they now entered. They enter here, and their stop loss will be above here. Okay, but as smart money trader, you understand that this is a change of character. You mark out this candle and wait for price to come in. So this candle now looks like what? An order block. Okay, the manipulation of deceiving people that the market will go up, and all of a sudden we have a down move. So when price comes back in here, you can sell. Okay, now why the retail traders will be waiting for this? Probably if this printed blue, they will say this is an invalid evening star. Okay, if this market goes up here and form blue, they will say it's invalid. Okay, that there's no confirmation. If this candle was up, they will miss the trade. They will say, no, forget about this, you are not trading. And what happened? Price taps in here and goes down. Okay, they not give them their own confirmation. But as a smart money trader, you don't need to completely write off all these chart patterns. The moment you understand how the market moves, you are putting the odds in your favor. So when price trades back in here, this is where you sell. Okay, you sell and then look for targets based on liquidity. Okay, the same thing with the bullish move. In this case, this is the morning star. This is a morning star. Okay, I can still remember those patterns because I read baby pips from the beginning to the end when I was starting out as a trader. Okay, so in this case too, this we have a high, a low, a higher high, a low, a higher high, a higher low, and all of a sudden that higher high was challenged. Okay, the moment you see that, we have a choch, change of character. Okay, we have a change of character. So how do you trade this? You just wait for price to come back. Okay, now the price may not necessarily reach this candle. Okay, you just need to be above the 50% Fibonacci level. Okay, I have to make that clear. Above 50%, or you zoom to the lower time frame, because the lower time frame will give you a clearer picture of the POIs to use. Okay, so when price comes in here, here, this will be buying from, and your stop loss will be above here, below here. Okay, now as a smart money trader, you'll be in this trade, but retail traders will be waiting for what? Confirmation. They love confirmation a lot, which is good, but the way the ideology is, they are lagging behind. They are just like an indicator. An indicator lags. They lags behind. So for you to wait for this bullish green candle, you'll be entering here, and in that case your stop loss will be wider. And if you move from here to here, you only be taking maybe 1 to 2, whereas a smart money trader will take up to 6 hours. Okay, so you as a trader, as a smart money trader, you don't need to ignore all this. All you need to do is to understand the market movement. So that is why it's not about being a smart money trader or a retail trader. Okay, using retail concept, it doesn't matter. What matter is how do you understand the market. Okay, so you have to go backtest all this, okay, before you can apply this. You can use this as a simple entry system. Okay, when you see this, you enter, but mind you, make sure you don't trade this on isolation. There should be other conferences that you put in place in order to make your trade work better. The second one, before I go to chart now, is the bullish and bearish engulfing pattern. Okay, bullish and bearish engulfing pattern. All up until now, we have an upward move. Okay, I'm explaining the bearish engulfing. We have an upward move. Then we have the last high here. All of a sudden, the low was challenged. The moment you see that, my friend, the moment you see that low getting challenged, we have a change of character, meaning the order flow is shifting bearish. And so, as a smart money trader, because you want to get in at a very good price, you simply wait for price to pull back into some area like this, and then you sell. Okay, your stop loss will be above this. Your stop loss will be above this. Okay, wait for price to come in, then target the liquidity below. Okay, but make sure you don't trade this in isolation. Trade it only at reasonable areas, probably on one of the higher time frame POIs and the rest. So because this low was challenged, you don't necessarily need a close. I don't want to put a wick here because it takes time on this trading view. Okay, I didn't want to put a wick. It can be a wick the moment this low gets challenged, because if you go back to the lower time frame, I will show you in the chart. When you go to the lower time frame, you are going to see pure change of character. So nothing fancy in change of character, nothing fancy. What you need to do as a trader is understand market behavior. Okay, I'm going to go to the chart to show you how it's being done. Okay, now for the bullish, market has been bearish, and all of a sudden the last bullish candle and the last bearish candle was challenged. The high was taken after the low was taken here. The high was taken, and in this case we have a bullish engulfing pattern. This is a strong bullish momentum, Habib. That means that the order flow is shifting from bearish to bullish. So when price trades back lower, you can take the price higher. Okay, and your stop loss will be here. Why the retail traders, they'll be waiting for in this bearish move, they're waiting for a bullish candle to form before they enter the trade. Okay, that is still good, but in that case their stop loss will be wider and their take profit is closer. Okay, and they might end up with maximum 1 to 3 hours. But as a smart money trader, you can end up with what, 1 to 6 hours. Okay, so you don't need to write off retail concept entirely. Okay, use that in your advantage. Understand market movement. So let's look at the chart and see what we can observe here. Now you can see here we have evening star 1 2 1 2 3. Okay, the moment this low was challenged, I can do this, go to the 4 hours, go to the 4 hour, let's go back here, sorry, let's use the replay feature. Okay, I was already on replay mode, so let's use the replay feature here. Now you are in the market, you saw this in the weekly, and the market has been bullish all this while. So with this sign, it shows that there is what, a shift in market structure, because the last high has been challenged. Even this blue candle has been challenged. Okay, therefore you know that this is a change of character. If you go to the daily, what can we see? You can see that on the daily we have a change of character here. You can see the low took liquidity, broke structure, then your point of interest could be somewhere here. Let's see what happens. The price trade up into that area. Yeah, At least it trade up into the IPA, okay, to close this liquidity. Then you can enter your trade there. You can see this is a change of character. Okay, in the lower time frame, your evening star is simply a bearish QM in the lower time frame. If you go to the 1 hour on this chart, let's see, 1 minute please. With 1 hour, you are going to see a better entry place. 1 minute. Okay, so we go to the 1 hour. So let's see what we have here. Let me take off this session liquidities. Okay, so now if I'm to enter this trade there, because I know it's within the weekly zone to sell, look at this 1 hour. We have that formation here. The moment price trades in here, this is where I'll be selling. Okay, when price trades back in here, I'll be selling here, and you can see the low created a high, broke up structure. This is what quasi model. This is change of character. Okay, price trades back in, this is your entry. And now you can see on the daily we did not get a very good entry because it's the daily, it's an higher time frame. But on the 1 hour, you can easily get an entry in here, and this is a good entry technique you can be using. Back test it and see if it works. Okay, now this is for the bullish and bearish evening star. Okay, this is the evening star bearish. Then we can also look at let's look at morning star. Okay, let's look at the morning star. So first of all, let's look at the bullish engulfing too. In this case, 4 hour, I've marked this out already so that I will not be looking for the an example. You can see we have a strong bullish engulfing candle here, taking out this. This is a shift in what order flow. This is a change of character. Okay, so when price trades back into this area, you'll be looking to sell. Okay, you'll be looking to sell. If you go to the lower time frame, you will see a change of character, the one you are familiar with. I don't need to be looking at all those things. Okay, I don't need to be looking at all those things. The moment I see the chart pattern plays out, let's go to 30 minutes. I don't want this video to be unnecessarily long. Okay, where is the place? I think I'm lost. Okay, here is it. Okay, you can see here now. I see this low took a high and the low was taken. So that is your bearish QM. That is your change of character. Okay, you can then decide to wait for price to tap into here to sell. Okay, let's see if it plays out. Price tapping, and then you can see the move down. Okay, one more examples. Let's look at the bullish side. You can see we have a bullish engulf. Okay, the moment I see this, I know that okay, the order flow is shifting. Okay, why the retail trader will miss this trade? Because when the next candle that forms is a bearish candle, they will not be interested in this. Whereas this is simply a move for them to enter the market. This move down give you an opportunity to enter this market. Okay, and you take the trade up, because if you go to the lower time frame, this is a change of character. Simple. If you see this place that maybe I've already entered the trade from here, somewhere here, and the day ends this way, I have more confidence to hold it as a swing trade. Why? Because I know that this low will not be taken. Okay, highest price comes down into this hidden base and then it moves. Now let's confirm our this thing now. Now let's take the replay tool Yeah, and then let's go to the 1 hour. In the 1 hour time frame, you can see that we should have a change of character in here. Let me close this. Okay, you can see this is a change of character. Yeah, price takes the liquidity, went above your entry here. So that next day movement was for your entry. When you enter here, you target your liquidity areas. Okay, so the main thing is not that the rated concept did not work, smart money is better. Even as a smart money trader, you can be in losses, okay, if you don't understand market movement, market behavior. And that's the most important thing. And that's what I keep telling my students. The market behavior is the most important thing. Okay, do not cram any pattern. Do not cram any pattern. But learning as a child, we learn how to recognize pattern. Pattern will help you to get it faster. But the mechanism behind it is what I'm teaching here. Okay, it's not just the change of character. Okay, it's you understanding market behavior. Okay, and if you really want to understand more about this Quasimodo stuff, I will see you in this next